Good afternoon. I would like to welcome you to our second edition of Insights, which I will be co-hosting with Dr. Roberta Lepre. A warm welcome to our guests, Mr. Kenneth Farrugia, Chief Business Development Officer at the Bank of Valletta, Mr. Andrew Spiteri-Willett, who is the Chief Financial Officer at ProHealth, and the Managing Director, Mr. Godwin Sherry at Focal Maritime Services. Thank you for joining us this afternoon. And we're looking forward to the second edition to discuss financial planning in times of crisis. And perhaps I think it's opportune to start with you, Kenneth, discussing financial planning, which is so critical. I think last week we mentioned during our first edition together with Roberta, we've discussed at length the importance of financial planning, especially during this time. It's almost the first item on each and every board meeting and every board agenda to be discussed at the level of the board of directors. And obviously, most of companies at the moment, liquidity measures for not only for the short term, but also for the medium and long term is of paramount importance. And even though there are government support schemes that companies are looking into, one important measure, obviously, is for companies to look for additional support from other financial institutions, such as banks, like the ones you represent. So in your opinion, which are the most important elements which you reckon should feature into financial planning at this particular point in time, especially when companies do not have the luxury or the time or the data to present long-term plans? So the focus is more on short-term plans, yet again, they need the support of banks and banking institutions. So in order to assist even our guests and other companies, what do you think are the most important elements that should feature within such a plan?
Well, undoubtedly, this pandemic has brought about a significant impact on economic operators across the various economic sectors. And if you look at, I think, three areas that I think boards of directors of these companies, and to a degree, even the self-employed, small operators, the small retail shop owners are focusing on, is one, trying to be creative, how to sustain revenue generation. Now, clearly, those businesses that already had their business model digital platforms through which they sold their products and services could easily switch the focus, to sustain revenue through these channels. Others that didn't have this yet in their business model, they were scuttling to do so, but we still have others that have really sort of relied on, the traditional sales of goods and services through physical channels. And clearly, with the directions given by the health authorities today, their operations are closed. So really and truly, their revenue streams have gone down to zero. So I think that's one angle that companies are looking at in this environment. Secondly, the biggest is clearly on cost management. The first thing you would always do is look in a granular manner at costs, starting with zero-based budgeting, particularly looking at discretionary costs, human resource costs, any capex that you had in plan to invest in new projects, and clearly they have been scaled back. And I think clearly it is the time to really revisit the cost structure of any business operation, because today it's all about survival, right? I mean, I think that's the key word on the agenda of many institutions. We need to ensure that we survive this storm. Last but not least, clearly is, as you rightly mentioned, the liquidity side. Liquidity is imperative, managing receivables and payables in an orderly manner. It's a challenge that many businesses are facing, because clearly you try to manage your payables and maximize the receivables, right? And with targets to ensure that those receivables are duly paid by creditors. But it's not an easy environment, undoubtedly. Insofar as support, I think those businesses that planned well, and it is fortunate and unfortunate that we have been going through a very strong economic cycle. So I think many boards strategically were in investment mode, literally looking deploy their reserves into new projects. Now, clearly, in that mode, no one would have ever dreamt 3 months ago that we would be going through this experience, right? Which has
Very much
changed
so.
the whole game completely. So, those companies that had, were well reserved, and they had a prudent policy insofar as, how they placed, what part of their profitability they place into reserves, part they pay to tax, and part they pay in dividends or invest in new projects. Those had a prudent policy of, strengthening their reserves for rainy days, and we're going through, I think, more than a rainy day. Will surely be or are in a better position to weather the storm. Those that haven't done so clearly are resorting to bank financing and the schemes that are being launched by, through Malta Enterprise with the support of government and the Malta Development Bank. Undoubtedly, I think the reality is that one, even from a government perspective, has to be careful and as cruel as it seems, to be selective which companies to support. Because there are companies that were already in dire straits prior to the crisis, right? There are companies that are in dire straits because of this pandemic, and there are others that really and truly can dip into their reserves and shoulder all the burden. Because really and truly, it's all about to what extent this support can be sustained over the longer term. We cannot foresee that the government keeps dishing out financial support to employees and to companies for a 6-month period or a 12-month period, because clearly it will impact the financials of the country, which at some point in time, all this debt will have to be paid back. So I think it's all about being very selective and choosing those sectors that are truly add value to the overall sustainability of the economy going forward.
And very much so, Kenneth, it's very much on a case-by-case basis. I work with different companies as well, and as much as, like you're mentioning, basically there are companies that have pre-planned and have always taken a very somewhat conservative measure in terms of reserves and cash reserves. They find themselves in a better situation even to negotiate with banks, and
Absolutely.
even looking at the famous NXA or NXB when it comes to the government support measures.
Yes.
Because obviously the burden, there is obviously burden for each and every company within every industry, undoubtedly. However, there are some in a better position than others. So probably a key takeaway that most companies are going to take away from all this during the crisis, even to prepare and even certain board decisions, like we've discussed again last week, the importance of reaching a balance between investment, but also taking care of the reserves as much as possible for whatever companies go through, not just pandemics such as this one, but each and every company goes through its own transition, I believe. So thank you, Kenneth, for your support on this one. Now moving on to Andrew and Godwin, probably. And focusing a little bit on the scenario analysis, which is very much, I think, important at this stage. Again, mostly, I think companies, the first thing that they have done is sit down and prepare a number of different scenarios, both for the short term, for the medium term, for the long term, focusing mostly on the short term as we speak, because as we mentioned, liquidity is very important. And I think those who managed to do so from the very beginning, at a very early stage, assisted them to take certain decisions immediately, rather than waiting for something to happen when there was still a little bit of unclarity. So when it comes to decisions like Kenneth mentioned, for example, of cost cutting, immediately when you have the particular different scenarios, one could actually analyze which costs, which overheads, which capital costs one can look into. But not only that, I believe as well with the working arrangements, certain working arrangements that companies have gone into with employees, obviously following confirmation with legal authorities such as the DEAR, but definitely most companies have gone through the whole cycle. So how important do you think, I know that both Andrew and as well as Godwin are obviously they will speak from different scenarios because Godwin is coming from the maritime industry, whilst Andrew from the health industry, which is a little bit different. But what do you think is the most, do you think there is relevance for companies to prepare these scenarios, and why?
I think, I mean, in continuation to what Kenneth said, I mean, financial planning really is not something which you do at a point in time. Financial planning is really something which is ongoing, and obviously having the proper setup, the proper controls in place, obviously gets you ready for times. For exactly times like this, which are unprecedented, and like Kenneth said, I mean, a rainy day. Obviously, I mean, when it comes to scenario, first of all, you have to deeply understand your revenue streams and how revenue streams will be impacted. So you could have your products. I mean, in our case, where you have will be impacted, and will be impacted. Products will be less impacted, and possibly areas of business which will have a positive increase. So that is crucial understanding. Once you have this in place, and you have your cost structures, and you have a deep understanding of what your controllable costs and not controllable costs, and what you can do without, and what possibly is an extra or possibly a luxury to your cost structure. And then you go into scenarios, and you stress your scenarios depending on possible outcomes, whether you stress your revenue figures, you stress your cost figures, and ultimately, based on the level of stress the company can take, obviously the board and the organization has to take decisions. I mean, somewhat hard decisions in a lot of cases, to trim as required, so to safeguard ultimately the going concern of the business.
So do you find it as an important tool, Andrew, for decision making? Both.
Well, it has. I mean, it has to be. It has to be. I mean, it is critical to analyze scenarios and to understand where. I mean, how far you can.
The extent
of the push and how much you can take, because depending how the company is prepared. And again, this is coming from. It doesn't come from today. It comes from its history and the way the company has been built up, and based on the level of stress the company can take, and how well capitalized the company is, and how well prepared at all levels, even operationally. Then at that point, I mean, you can determine how drastic decisions you are able, or you can not take in this situation.
And the when also features very much in the sense when to take the decisions, and depending on obviously the planning which you have put in place. So I appreciate that. Godwin, I think in your case it's a little bit slightly different, because revenues might not be coming in, so it's a little bit more challenging to assess when you have a scenario, and the difficulty of having zero revenues for a longer period of time, most probably, because in your case the industry is going to be hit for a longer period.
What is interesting is that under the last version of ISO accreditation, which our company is subscribing to for many years, but 2 years back, the platform of ISO accreditation was changed to one based on risk. Hence, you had to test your business against the vulnerabilities that you have for the different products and services, and then assess in the what-if scenarios, what if this were happening. However, unfortunately, this never prepared us to what if your market disappears overnight. And this is what has happened in most sectors of the maritime industry. And the other, which brings me to the issue of financial planning, which is very, very strategic at this moment, is the complete lack of clarity. So when we talk of planning, You have a vision of you have your historics to guide you. You have your seasonalities. You have your consumer patterns. We are seeing all this changing completely.
Of
In
course,
other
because it's
words, if
completely
your
new
client base
scenario.
was made up of 100 clients coming from different retail sectors, and 75 of these have had their retail business closed, so the client is not there. And I think, all of us have to do a lot of fast thinking while running, literally.
Indeed.
The strategic issue is becoming even more strategic. In what sense? You start questioning the build-up of the business. In other words, if, as we have within the maritime sector, you are running a passenger terminal, if your passengers are no longer there, you have absolutely, and I think a common denominator which is characterizing our industry is that the fixed costs are there. We are all going through the motions of reviewing fixed costs as much as realistically possible, and look at graphically what is the gap between your fixed costs and the decrease in your revenue. Up to which level will you come when you say this is no longer sustainable?
So it's more cost management in your case,
it is,
obviously, in your scenario.
A
because
very
demand is not there.
Good point made by Kenneth earlier is the issue of going concern. I must pay tribute to the audit firms who are really, engaging with us and discussing. And this is one of the discussions that we are having at the moment, be it a standalone company or a company within a group. When it comes to certifying audited accounts and confirming that these are going concerns, going concern has a limit. MFSA has kindly extended the period for the filing of accounts, I think specifically because of this issue. And my worry, without trying to be too pessimistic, is how long this is going to last. Once again, from our industry, we are now seeing the problem from the demand side of the service. So we started in January with the supply side. So China closed down, ports closed down, ships had no cargo to carry. There was no supply, and Europe was demanding, but there was no supply coming. Now it is the reverse. Now China is up and producing and exporting, but the demand from Europe is not there because of the lockdowns, because of the cash flows, because of all the reasons that
and I think it's a little bit difficult as well and challenging in your case, Godwin, to rethink the business model whilst you're looking into the cost management structure of your operation as well. Because as you said, the timing is not clear. However, it's not a situation of waiting and see as well. So something has to be done in your case, because as you said, you cannot continue for such a long period of time in the situation.
We have brought down our planning literally to a weekly exercise. So every week you undertaking a review depending on the sales that are taking place. For example, in not this week, but the week before, we had the phenomena of booking cancellations. So the importer has placed his order. He requires the product, especially in the food industry, but his supplier is not in a position to deliver. Or there is a warehousing problem that it is. We are seeing it happening in the oil industry, where there is a negative pricing of oil because there is nowhere else to store oil. So they're giving you a bonus to take oil from them and find a place to store it. The whole business model that we are used to, and this is my biggest challenge, and something that I like to debate with my friends who are more hands-on economists. Depending how long this lasts, I think the whole paradigm of the business model that we learned from times of Keynes to the modern times of doing business has to change.
Completely. And for some industries more than others, Godwin, as well. For some industries more than others.
The impact is there. For example, we know for a fact that from now, at least till June, there is absolutely no upsurge. We know exactly how many less voyages around the world will be taking place because of the demand-supply consideration. When you bring that into the local scenario, the consumer, the retailer, the wholesaler, and how they are going to fare out in terms of import and export, it's a completely new scenario. No one can predict the demand. I say it because I've been sick hearing about toilet paper, but toilet paper no one thought of until today. It's a mystery for me why people go out and buy. But it brings you to the consumer mentality, which is the driver of the demand side. How is the consumer reacting to this? Apart from the fact that you have certain retail businesses, furniture, clothing, whatever, which are shut down. So there is so the business model, which saw us doing the seasonality exercise, that you have the build up to the summer period, and these are the best months for your import side.
In your case, it has been revised on a weekly basis, Godwin.
Of course, once then you project this into the larger industries within the maritime, like a free port activity, which does not depend on the local market, but it's the international market. There, the impact is magnified 1,000 times over.
Of course.
We have seen drops of 40–45% in throughput. When you translate that into the financial side, it runs into millions. We have seen that in the ship repair industry, where all of a sudden vessels are no longer calling for repair because of the logistics, that you cannot bring over engineers. There is a problem with your crew. So 100% market gone. The same with the tourist industry, like Valletta Cruise Terminal. And related to that, then you have the ancillaries, the pilots, the tugboats, the stevedores. All this has the ripple effect. So I think,
in fact, I think to tie a little bit to this as well, something that we've been hearing a lot. I think you as well, Nadia, can relate to this when you talk to clients and people that you help. Is for smaller businesses who offer, in fact, services or products to other larger businesses who are experiencing these difficulties that you are mentioning, Godwin. Perhaps before all this started happening as well, they used to extend their credit terms beyond the usual 30 days or more because there would be an ongoing relationship and revenue would be flowing anyway. However, now things have obviously changed, and these smaller operators are also having problems in recovering what was due to them 2 or 3 months ago.
I can say that this week we had the first case where a client declared, I will not pay. Now, is it genuine, taking advantage of the situation? The fact is, we are not collecting the money.
Yes, it's a little bit of a sensitive situation.
So yes,
Kenneth and Andrew, do you experience the same as well? Especially not in terms more Andrew rather than Kenneth, but probably Kenneth with your experience with different companies. I think it's more about relationship building now as well. It's obviously we all need the money as companies, and we all need to collect the money that's due. But
I think this is the
and
time.
sharing the risk as well, I suppose. Yeah, it's also a matter of sharing the risk, sharing the burden, and then coming up with common solutions, I suppose, finding some kind of balance.
Yes.
How can we move away from just a financial transaction? Because it is a financial transaction, which I understand and I appreciate. However, they are unprecedented times, as we mentioned. There's a relationship.
The financial planning is not the financial planning. I think financial planning is part of the planning, really and truly, because this is the time where you plan throughout the business, the business life cycle. You plan, you deal with your customers, your relationship, you deal with your suppliers. So basically, what you reap is what you sow at this point in time. And when troubled period like this, we are faced with such troubled period. You go back to these relationships, which hopefully you have been building through the years, through trusts, through good business and good governance, and again, you go to suppliers, try extending credit terms, and obviously, hopefully, your customers will reciprocate, obviously, the respect and trust which they have in you as a supplier. I think that is part of it as well. It's a whole chain of things, and as is being said, it's a whole chain of events. So it is not no one is an island. Everything that happens, it impacts from the customers up until the biggest supplier or producer.
Very much so. What are your views, Kenneth, on this one? It's a particular situation, obviously.
Yes, look, undoubtedly, in a business as usual environment, relationship management always plays an important role in the way that you treat customers, right? When you have long-standing customers, you have always had no defaults whatsoever, payments received in an orderly manner. You would normally, if you were asked for an extension, you would easily grant that, right? In a business as usual environment. However, this is impacting all customers alike. So intrinsically, we are really chasing each other. Someone is chasing for receivables, so far as payables are concerned, right? But if you had a strong business flows coming in, you wouldn't normally mind for a strong customer, for a long-standing customer to extend the terms. You wouldn't bat an eyelid. Now, the environment is totally different, where you have your own obligations, maybe your traditional financing arrangements have taken a twist, in a way that you really need to receive all the receivables that are due in a timely manner. So, it's not a business as usual environment. It's an environment that is impacting the revenues of all businesses, some truly more than others, some impacted more than others because there are some strong operators that have had financial planning at their core. So, they're very strongly reserved and they can withstand, shocks in the maybe short to medium term. And there are others, undoubtedly, that will hit the wall and will go bankrupt. And I think the challenge from a banking perspective is that, it's ironic in a way when I look at this, because if you look at what happened in the financial crisis, 10, 12 years ago, the banks were the catalysts or the culprits of the financial crisis. And now, 12 years down the line, they're being dubbed as potential saviors of economies, right? Because clearly banks are being resorted to support clients. And nonetheless, one must bear in mind that, over these last 12 years, the regulatory framework has changed markedly. So banks have different regulatory obligations, regulatory capital requirements, and albeit we're seeing a degree of flexibility, obviously regulators are very vigilant on the banks because banks are, and even in Malta, if you look at their balance sheets, are very well capitalized, and they are in a position to finance institutions. But ultimately, if you finance institutions or entities and they hit the wall, these are bad debts on the books of the banks, which will trigger capital requirements. So it's a vicious circuit. So banks have to be very wary and be very cautious in the way they're lending out their financing companies. Taking a more of a sort of short to medium term view that if this is over the next 12 to 18 months, then these companies will gradually recover and will not go belly up and being a problem for the banks. So it is to a degree a catch-22 situation, and it is unfortunate that one has to be selective, which companies to support.
Which I think, touching upon what you just said, Kenneth, we know that most of the businesses in Malta are small businesses, thousands are micro businesses.
Yeah.
To what extent would these kind of businesses have contingency funds, or is it a common practice that they would have cash reserves to withstand these shocks, as you said?
I'd like to think yes, but the reality, if one were to really
Is otherwise.
the financials of these companies, I think their financial planning lacks the standards that one expects of.
Because those are the bulk of our economy, at the end of the day.
Exactly, absolutely. So for those entities and small enterprises that were sort of foot to mouth and really revenues to pay off debts, to pay off VAT, and those will unfortunately, collapse. I think, however, because you try to find those solutions to problems, and I think that has to be the mindset of any entrepreneur or business. I think that this environment has created what I call co-opetition, so cooperation between competitors, right? So far, competitors have been very vigilant to protect their market, to protect their customers, but clearly I think there is scope for competitors to come together. And I think consultancy firms and audit firms that know the affairs of their clients very well, these intermediaries, these gatekeepers need to come together and try to bring and match, their clients that are having similar problems together, because there is scope for mergers and there is scope for acquisitions of businesses, to the benefit of both entities. And I expect to see more of this in the coming months. And
I agree with you completely.
Hopefully, yes.
Because it makes a lot of sense, especially when you have resources and they are finite resources, and that on the other hand, when the demand is difficult to challenging to create, we're waiting for the demand to be created, then it makes sense for companies to join forces together rather than compete with one another.
That's
and
right.
As you said, I think there is enough skill set in terms of consultancy firms, business advisors, businesses which come together to support the small and micro that Roberta mentioned, be able to take them to the next level, especially if these companies would like to go through this transition. It's an interesting one, Kenneth.
Yes, I think there is scope for that. And maybe from a legal architecture point of view, and maybe from a fiscal side as well, this is what the national government should be looking at, to facilitating the ability for companies to get together now more than ever, right? Because it means the survival of business, which will be beneficial for economic growth going forward. It will safeguard employment. So there are a lot of benefits to be had. So one may be relaxing even the fiscal treatment of such mergers or such acquisitions, may make it more palatable for these business owners to really sit around the table and say, I want to safeguard all this value that I have put into my business over these years. I don't want it to go to ruin. So, let me consider this, because ultimately, I will get something out of it rather than nothing.
Yes.
On this point that Roberta made, I think there are other two issues which are crucial at this stage. One is the heavy investment that has been going on into property as a balance sheet item. And we very well know that that is not turning into liquidity when you require that. So I think, especially the banks are going to be faced a lot with this issue. The other, from a business perspective, there is a need. Now, how at a government level you go about doing it, there are various tools. But looking at other countries and the way they are managing, there is definitely the need of actual cash liquidity injection into the economy. Now, whether you do that by telling people stay at home and I will pay you, or telling the businesses keep running and I shoulder part of it. The financial planning, I mean, there is no magic formula. If your income is not covering your fixed costs, it's a question of how long you can sustain.
Sustain it, yeah.
But looked at from an entrepreneur point of view and looked at from a social point of view, of course, there are different. But at some stage, these two have to come together because it is one country, one people. He is an employee, but he's also a taxpayer, and he's a family person. So whichever way we go about it, we come how we're going to finance ourselves through this difficult period. And I very much believe that at some stage, I think the message from Europe, from the European Union, came out very clearly this morning, where they are saying that, you know, it's the European Union has to pump in trillions for the known problems, let alone for the problems that we are still not aware of. So I think even in Malta, we have to start discussing government, social partners, financial institutions, as to how is the country going to finance its way out of this issue. At a micro level, you have a plethora of situations, from the sole trader to the company which is employing 1,000 people, you know, on a local level. But the common denominator in all this is going to be how to sustain, you know, the flow of business, to sustain the people who are earning their livelihood from the business. And
I think there's the need. Yes, I think there's the need from now, Godwin, to start. Not only, I think we had this discussion beforehand, even with Kenneth, Andrew, and yourself, that companies take the lead as well, and in the spirit of collaboration, of companies collaborating all together, even thinking a little bit outside the box, being a little bit more creative on how they can themselves sustain their business together with their collaborators or with their partners. I think the government support is paramount, and it's very important. And I think we've seen that it has sustained and it's already helping companies to stay afloat. But yet again, I don't think that companies should over-depend on such. At least that's my opinion on that, on the schemes and on the government schemes. Because at the end of the day, it's about how a company can sustain on its own, and to be able to take it through together with the employees or not. Sustaining as well unemployment and leading that to underemployment perhaps, and having a number of people that are not actively productive within the economy, I don't think it's also a solution. So I think there are different debates which we are going to see that are going to happen, especially locally in the coming weeks. In this regard, that's what I believe.
I'm a firm believer in the resilience of the Maltese character. Our economic history is made up of Malta taking the advantage of an opportunity, be it a neighboring country which is facing problems, or be it a situation in the Mediterranean. We always manage to translate these into business opportunities. And I am sure that, however, this is unprecedented. So I have absolutely no hesitation to believe, and believe firmly, that the Maltese character will come out, as it has done in successive historical situations, to overcome. How we bridge that gap to avoid the economy going into a deep recession. I think that is, once again, we're talking on our level that we cannot see 2 meters away to do our financial planning. Imagine at government level, how many more unknowns there are to do
for sure
the planning. But I believe that, to come to the subject under discussion, I think some form of clarity in direction or rules, as we were mentioning, for example, the issue of credit. Now, are we going to resort to the traditional way of collecting your debts, or there is agreement at whatever level that there has to be a period of tolerance, and what is the cost of this period of tolerance, for example? So yes, it has to be industry driven, but the public sector must give direction and support by way of adjusting the economic tools, because the traditional tools we're used to are not the tools required for the present situation. It's completely uncharted. Taking an example from the maritime industry, we have seen these last weeks something which happened in the 70s in the time of the oil crisis, where ships are not coming through the Mediterranean, but will sail around the Cape, so going all the way down to Africa and coming up again to save money from crossing through the Suez Canal, the Mediterranean, and proceeding to Europe. So industries are looking out for different solutions.
And opportunities, yes. I think this brings us to something very close to your subject, Rob. Innovation, business models, lessons learned.
In fact, Godwin also mentioned resilience a few minutes ago, and that also requires a degree of innovation, no? But from my experience, at least working with businesses, particularly smaller businesses, again, very few of them would have like a line item in their budgets which they reserve for research and innovation. So now that we're experiencing this, would you think that maybe this will become more of a common practice to make sure that we are actually investing in research and innovation on an ongoing basis as a tool to give us resilience and adaptability if something had to happen? I don't know who might want to react to this. Maybe Andrew?
How are we going to innovate?
I think people obviously. I mean, after hopefully soon we go through this. I mean, the mindsets will obviously change. I mean, rather, I think, and again, it's the mindset rather than having a specific line item on the budget or whatever on the P&L. I think it will be a lesson to take home after all this, that it all goes back to planning. Maybe part of it's financial, but there is a lot of other planning which to do when it comes to business continuity, when it comes to dividend policy, when it comes to risk assessment of your company and risk assessment of your company. So and surely, I mean, the business model will change. I mean, the way we have done business a month ago will not be the same in 6 months' time. So a degree of an investment of understanding, and I think at least in our case, I mean, our biggest asset is obviously employees. So the investment there, I mean, I think investing on the employees have to be part of the company when it comes to identifying and be creative and thinking outside of the box of how to operate in the future.
I'm with you on this one, Andrew. I think the employees should be part of the process, part of the transition, because at the end of the day, they're part of the organization.
I mean,
You wouldn't be able to go through change without them.
Most cases, I mean, up till now, I mean, the training and the training we give to our employees, or is knowledge based, right? I mean, it's you go into a training session, you learn like a number of points, and then you hopefully you apply them. I think moving forward, and that is where call it research budget, you can call it anything really, but it's investing on the creative thinking, on how to reap the benefit of just this creative thinking, and it comes from all angles. I mean, from all departments within. I mean, the company. So I guess yes. I mean, there has to be a budget, like the typical IT budget if you work more remotely. But more and more importantly, it's just a mindset shift moving forward, and that is it goes beyond the budget preparation, because that goes at the shareholder level, at the board level, because I mean, what is said there, the mindset trickles down into the organization.
The actual culture and personality of the business, right?
Correct, perfect. Yeah.
Exactly.
So,
Kenneth, you've seen a lot of changes as well on this point, on this item. You've witnessed a number of changes, even in terms of how they relate with the banks and how they actually visit the bank, or maybe there was a particular cohort that actually was more inclined to visit the bank rather than go to ATM and contactless payments. You're very much, I think, on the side that we have to learn lessons and to have to take them away with us and learn from something from this transition.
Yes. No, like as always, sort of, Roberta and even Andrew were saying, creativity and innovation were always the hallmark of successful companies, and they should form a strategic component of any strategic plan of any organization. It is ironic in the banking world, really and truly, what brought about the shift towards channels that I think many financial institutions were really keen to see to come to fruition. So, traditionally, we are still a cash-based and check-based driven economy. That is very unfortunate in this day and age, despite the significant investment in technology at government level, at e-government level, where, as you know, we rank quite highly. I think we rank first in Europe for the e-government technology. And we've seen this shift. I mean, the drive towards managing this contagion and to decrease the footfall of clients calling into bank branches has obviously instilled a number of, brought into play a number of policies, such, for example, we launched a policy, and then it was a direct central bank a few days later, that customers that wish to go to a branch would need to withdraw a minimum of 500 euros, or otherwise, and if they want to withdraw less than that, they need to go to an ATM. And as a result of that, we saw a shift towards other means of payment. So we saw people increasingly use their cards and their mobile payment apps to pay for goods and services. And we saw an increased demand for debit cards, because you'd be surprised how many clients we still have collectively as banks that have a bank account but don't use their debit cards for traditional payments of goods and services. And some argue that the old generations will not adapt to this reality, and I always shoot this down by looking at countries like the Scandinavians, where checks don't exist at all, and if you go with cash in a shop, they frown on you, right? So I don't think this is a generation issue, or this is restricted solely to the millennials, but it is a culture change that we need.
It's a culture change, indeed.
We're pleased to see that. We're pleased to see these shifts towards alternative channels. And my point on this, I think this pandemic will have a number of learning outcomes, and I know we discussed this in preparation for this event. And I think we need to literally take the opportunity to hard code these changes into our business models and even into our economic model, which, as we know, created some pains along the way, in the housing and the environmental, right? And we know, for example, the benefits that teleworking has had on the environment, right? You go out, you can sense the fresh air, right, which is markedly different than what we experienced 3 months ago, right?
Very
So
much.
why don't we look at this and take this as an opportunity to hard code these changes into our economic model going forward, right? And I think it's a right time at national level with all the economic actors, to come together and literally see how we can strengthen our value proposition as a country by taking these changes and seeing what are the catalysts that will increase the take-up of these changes, right? So we, from an ESG perspective, we contribute validly to that. I think it's a great opportunity, to be creative, to be innovative, and to hard code these positive outcomes into our economic and business models.
And the transition is long enough, Kenneth, to give us the opportunity to do that. Because
absolutely.
A week or two, but we're already 2 months in, and we still have a few more weeks or months. But let's focus on weeks for now.
Yes.
Thank you, Kenneth. Yes. Maybe Godwin would like to
Yes,
kick off and give us your views on this one.
I completely agree with the observation made by Roberta regarding research and innovation. I would just add to that training, because they go very much together. I think one big challenge we have when it comes to management, the idea of extreme specialization, as we have been used to, is being very seriously challenged by the current events, where you need people who are more flexible and who are prepared to adjust. We see this on a day-to-day basis. You have very valid people who are doing very valid work, but who are falling out because they cannot adapt to the changing situation. And I think this should guide us for the future, that our management training styles and skills have to depart from, I am specialized to sell or promote this service, to a style where I have to understand what the client requires and fit the services to what the client requires. The phenomena which has hit Malta these weeks is the home delivery. People are tripping over each other to do delivery to your home.
And complaining for long waiting times.
It saves a lot of traffic, by the way, and a lot of pollution and time. We have more time on our hands because we're wasting more time from queuing up or whatever. Having said that, I don't think that any business can really survive unless business development and innovation is within the DNA of the organization. I don't think that there is anyone.
In the sense that I've witnessed as well the shift from specialists to generalists in terms of management teams. I think most companies I deal with, especially even CEOs that are kind of struggling, the ones that are within organizations that are more focused on growth rather than restructuring, for instance. Because it's a completely different set of skill set, particularly. And the fact if we don't adapt, if we're not flexible as individuals or as employees or as organizations, I think, yes, those people will suffer. So completely, I think that's a very interesting lesson and interesting comment, I must say. So thank you for sharing that. So I think, Roberta.
Sorry, I think we have to carry it at a national level, because Malta has to realize that it cannot anymore rely on 3 particular products, be they tourism, services, or I think we have to be more creative as to how to attract investment to Malta. to be less reliant on specific sectors.
And less over-dependency, yes, because obviously that's important. Roberta, would you like to close off with a few
Yes,
comments?
I think it was an extremely interesting discussion coming from someone who does not like numbers very much. I think it's a very interesting observation. I don't know if our guests can relate to this. I think for me, at least, the key takeaway is that financial planning is essentially just translating the vision and the ambition of the company into figures. Now, obviously, perhaps the way we used to look at our figures in terms of revenue coming in and costs being addressed is not perhaps the way we have to carry on looking at our financial structure going forward. And I think it's beautiful how human elements tie into something that appears to be, you know, so cold as financial planning. I don't know if our guests can relate to this.
Indeed, but even myself, I think the main takeaway has been definitely balancing out investment and cash reserves for companies. I think that's something which diligently each and every company has to think, not only through going through pandemics or crisis, but even for the long term. We've discussed a lot. Let's take the opportunity even to collaborate together as a business, not only with our competitors. Let's create new things. Let's take this opportunity as a community to help each other. To maybe some industries are suffering more than others, but we have enough talent, we have enough skills on the island where we can cooperate and take the businesses to another level and transition. So I take the opportunity to thank our guests, Andrew, Kenneth, Godwin. Thank you very much for being with us and sharing your insight on the subject. Thank you, Rob. Thank you, Roberta. And we look forward. Thank you. And we look forward for our next session next week, same time on Thursday, 30th. Thank you very much.
Thank you.
Thank you. Keep well.
Bye-bye.